Let's go through the answers for the worksheet, The Fundamentals of Investing, to help you review for your quiz. So stocks. The definition of stock should be a share of ownership in the company, and it is a form of owning. Bonds are a form of lending to a company or the government, so it is a form of lending. Mutual funds is when a company combines the funds of many different investors and invests that money in a diversified portfolio of stocks and bonds. That's owning. Index funds is a mutual fund that was designed to reduce fees by investing in the stocks and bonds that make up an index. That's owning. Real estate is owning of residential or commercial property or land, which is owning. And speculative investments is things like futures, options, and collectibles, and that is owning. So the only lending one would be bonds. Then, number 1, the possibility that an investment will fail to pay the expected return or fail to pay a return at all is C, investment risk. A, the rise in the general level of prices is A, inflation. 3, the uncertainty regarding the outcome of a situation or event is D, risk. And the danger that money won't be worth as much in the future as it is today is B, inflation risk. So CADB. 3 examples of how investing is different than saving. It helps build net worth. Its assets are purchased with the goal of increasing in value or providing additional income, and investments are usually used to pay for long-term goals. So if we make this pyramid and we go from low risk to high risk, at the bottom, low risk would be bonds, followed by mutual funds, stocks, and the highest risk is speculative investments. Describing the 4 types of returns, which you will need to know. Interest is the money paid for using someone's money. Dividends are the share of profits distributed in cash. Those are given to stockholders. Rents are a fee charged for the use of property or land used in real estate. And capital gains is unearned income received from the sale of an asset above its purchase price, like when we'd sell stock for a higher price than what we purchased it for. Number 8, describe the concept of investment philosophy and how it relates to portfolio diversification. The potential for higher returns can be what motivates you to accept higher amounts of investment risk. Everyone has a personal tolerance level for the amount of investment risk they're willing to assume. The goal of diversification is to create a collection of investments that will provide you with an acceptable return and an acceptable exposure to risk. So what you are content with in your risk tolerance policy. Number 9, what's the difference between a full-service brokerage and a discount brokerage firm? Full-service brokerage is going to be more expensive. They're going to have a financial advisor that's going to complete transactions for you and give you advice, whereas a discount brokerage firm is only going to complete the orders that you give to them to buy and sell investments. No advice will be given, and it will be a lower cost. 2 questions you should ask before hiring a brokerage firm should be anything like, how are the firm's financial advisors compensated? How long have they been in business? Do they have a history of positive reviews and success? How do they rank in comparison to other firms? Are just a few things to think about asking. But it's your money. You have the right to ask. And 11, what are 2 benefits of tax advantage accounts? Advantages would be they reduce, defer, or adjust your tax liability. So either you invest, either taxes are taken off right away and then you don't have to pay them later when you take the money out, or you don't pay any taxes right away and you will have to pay taxes when you take them out. So those are kind of the different options. And the true-false. Number 12, taxes must be paid on all investment profits in the year the unearned income is received is true. 13, when focusing on wealth accumulation, the rate of return earned in investment should be higher than the rate of inflation is true. 14, an individual's investment philosophy changes throughout their lifetime is true, or it can change. Individuals with an aggressive investment philosophy are not willing to take on risk for the potential of higher returns. This is false. 16, portfolio diversification is a method that helps an individual receive the highest return on investment. That is false. Diversification is going to not give you the highest return, but a return that you're happy with because you're diversified. So you may lose on some, but gain on the others, and hopefully even out to be an acceptable return for you. 17, in order to buy and sell investments, except for real estate and certain speculative investments, an individual needs to utilize a brokerage firm. That is true. And 18, a full-service general brokerage firm usually charges lower commission than a discount broker, and that is false. So true, 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 false, false, true, false.